Welcome back, folks. I just want to walk you through the trade entry for the long that I have just journaled on my Twitter profile. Okay, it is this trade here, okay, where I entered long at this mitigation block after we had taken the low of the week, as we've rejected from that low of the week. Okay, so on a 30-minute chart, you can see we have taken the low of the previous day, which is also the low of the week. Okay, that is Tuesday's low right there. Okay, and this is one of my favorite reversal patterns, is 3-bar reversal. Okay, where you have a middle candle that wicks through and takes that liquidity. Okay, immediately rejects, and you have this engulfment of this initial first candle. Okay, 3-bar reversal pattern. And I have longed on the 15-minute chart, okay, here as the market's moving up. And these two down candles are the bullish order block, okay? So as soon as we get through the open, I've longed there at around that 2480, okay? Somewhere in 2480, 2480.9 something I think it was, okay? So right there, that's my long. This is essentially a balanced price range, okay? And this is just a crawl down, right, prior to the news announcement. Okay, I'm expecting this crawl down, and that is essentially to basically balance out this inefficiency and come into this bullish order block. Okay, my target was at the high of the current day. Okay, around that 24. Let me just check that. What's the exit there? 2498. So you can see the entry 2480, exit 2498 or 2499. Okay, so that 2480 is at that order block. Okay, on that 15-minute chart that I've shown you, and the exits here 2498. Okay, above the current daily high, which is there above the high of Asia. Okay, so that is the walkthrough of the entry and exit of that trade. Okay, and on a 4-hourly chart, we do have these equal highs. Okay, as well as this inefficiency that I believe we need to come into after taking this external liquidity. We also need to be mindful of these equal lows that are still pending on the 4-hourly chart, and of course the 4-hourly gap down here, and the weekly liquidity that still resides below. Okay, and this fair value gap, and then obviously this bullish order block on the weekly chart. Okay, so all of that needs to be taken into consideration. My long trade here, just a scalp trade. Okay, which was quite a straightforward trade, as the market had a lot of liquidity above, okay? And essentially that is the dump for the pump, okay? Relative equal highs here. So once liquidity on the downside was taken, which was a daily low and a weekly low, okay? It's expected to come back up to these equal highs where there would be stops, right, residing above that level. All those folks who are short, once this low has been taken, then they want to have their buy stops above those equal highs. That is what the market engineers, okay? So that's why the market will reach to that level after taking out these sell stops, right, on the way down, okay? So I hope it makes sense. You've got to go back and you've got to look at this on your own chart, okay? Look at a 15-minute chart. First thing I want you to look at is this low, right? Tuesday's low, which is the low of the current week. Okay, look at that on a 30-minute time frame and study this chart, right? What does that reversal look like? So you know in the future what a reversal looks like when you take out a previous daily low or a weekly low. Okay, study that on a 5-minute. What does it look like on a 5-minute? Okay, so that again, you know what a reversal looks like. So that if it happens again, you can identify what a reversal looks like when you take out a daily low or a weekly low. Okay, this is repeating, right? This price action is repeating. This is the balanced price range. Okay, now let me draw a line here. I think I have a line there. Let's see. Yes, let me just double check. So that's the previous low. Okay, and I want you to look at this on this 5-minute chart. This comes down through that daily low, immediately rejects, okay, and then pushes back into that weekly low. So that's the pattern. Through, up, and back into, and then up and away. Okay, so through the weekly low, back inside the range, push back into the weekly low, and then move away. Right? I've given it to you now. Study it. Okay, push down into, through the weekly low, reject, push back into the weekly low, but don't take it out again. Right? Doesn't take it out again, it stops. Okay, so you go through, back inside the range, push back into the weekly low and up and away. Okay, revise that. Then you have this balanced price range. Let me grab a square. You have this balanced price range. Okay, you have this single down candle, single up candle. Okay, making that balanced price range. Okay, we're not really expecting price to get back into that zone. Okay, it can come back into this gap, but that's it. Right? Very, very tight. That's the pattern. Okay, through the weekly low, back inside the range, push back into the weekly low, up, up and away. That's exactly what that is. I've given that to you now. You don't need to study it. Okay, on a 30-minute, you have this, right? 3-bar reversal. That can also be a 15-minute, exactly the same, or even on an hourly chart, or even on a 4-hourly chart. It's all about the candle formations. Okay, what does this look like on a 1-minute? Okay. Okay, there we go. So these 3 down candles. What have I said about 3 down candles that take liquidity? Okay, this is right at the end of the London session at the new hour. Okay, goes back up and now it's pushing back into the order block. Right, these 3 down candles, fair value gap, 3 down candles. All right, picking up all the orders and then boom, we don't see that come back. Right, when you have this, you will never see it come back. What that means is, let's go back to a 5-minute because it's a bit easier to see. What that means is, when you have this setup, okay, where you have gone down through the low of the week, back up inside the range, this move down, and then you start to see it moving up, will never, let me do that again, okay, so you have this move down, back inside the range, just push back in then up, it will never come back below that low. If it does, you're wrong, okay, if it comes back against you, right, once it's made that pattern, which is through the weekly low, back inside the range, push back in and then away, that initial move down that takes that weekly low, this one here, should be the low, right? What does that mean? What am I telling you? I'm telling you that if that starts, it should never come back below that. If it does, you're wrong. That means the setup is void. That's not your setup. Okay? So how good's that? Right? If you are coming back inside, that is the low. Okay? Taking that out, back inside there and pushing back into it, that means if we expect repricing from that level, what that means is very, very tight stop. 25 pips maximum. Maximum. Okay? Because you know you're wrong if you get any print below that, because that's not the setup. If it comes back, that's not the setup. You're wrong. Okay? So I've given you a very, very gold piece of nugget there. Okay? So your job is to study this, right? Let's have a look at this on an hourly chart. Now on the hourly chart, you can see this is that movement down at 9 a.m. between 9 a.m. and 10 a.m. where that news announcement is, coming back into the bullish order block and fair value gap. Okay, so when we're bullish, right, we've taken out the low of the previous day, we have taken out the low of the current week. Okay, on this hourly chart, we have traded above the open of that down candle, which is your bullish order block. Okay, so this is now bullish order flow. Then you can expect the market to come back down into the bullish order block and this fair value gap. Right, so when you're bullish, you're looking for bullish ICT signatures coming back into bullish order block, coming back into a fair value gap. That's your bullish ICT signature at the right time. This is inside the 9 a.m. and 9:30, right? 9 a.m. This is 1 hour chart. So this is at 9 a.m. to 10 a.m. candle. Okay. So that is a great entry if you're not already long on this position. Okay. The news catalyst is completing this move. Okay. Completing this move, meaning back to take liquidity, high of the day, right? And probably will continue to take these highs, which is the current high of the week, right? Low of the week to high of the week. That's kind of what I think is the draw on liquidity there. Okay, so as I said, you've got to go back and you've got to study these charts. I've given you a few pointers there. You've got to go learn this. Okay, you've got to build your muscle memory so that you can identify what I've shown you in real time. Okay, and just to go back through where I've entered is at this mitigation block. Okay, down 2 down candles order block. I've entered up here as we've crossed the open of this. Okay, which coincide with this mitigation block where this candle is coming down into that bullish order block and that mitigation block and just takes off. Okay, this is, price is moving fast here. Okay, this crawl is all the news coming back to this order block and rebalancing on higher time frame, like the 30-minute and the 1 hour time frame. I've mentioned to you before, when you have this type of a candle, okay, in one of my previous videos I called out this type of a candle. When you have a bullish candle like this with a wick above, that's going to be the draw on liquidity. So even this move here should take out that high. Okay. And that is close to that 2,500. So watch that level. Okay. I still have some lots on. Okay. That I'm looking for a move higher. Okay. So I hope this video is useful. As I said, go back and study these charts, everything that I've said. Look at it on a 1 minute, 5 minute, 15 minute, 30 minute, and 1 hour chart and a 4 hour chart. Okay. I will now talk with you in a future video.